So nobody asks C plus I divided by D. So I think the ecosystem in the cohort is built like that the bankers are more interested in doing credit, even though they are triple Bs, double Bs, or even unrated to some extent, but not to a not through a bond market route. That is what I feel. If you bridge this gap, if you say that from regulatory perspective, lending is equal to investing in the bonds, I think the multiple problems will get resolved.
How do you think technology, particularly AI being so widely used now, has changed the way investors are discovering, comparing, and investing in corporate bonds?
Thanks so much, Kaushal-ji. Good afternoon. I think AI is playing a very critical role in this aspect, but at this stage where we are, because India's retail bond participation is less than 2%, right? I think the first thing AI should do is actually make an investor aware of what their fixed income exposure should be. Like how much should they invest in fixed income for that matter? And how should they go about it, depending on their investment objective, how much money they want to invest, for how long they want to invest, etc. And second is actually personalizing that for every investor. Like, I think at OPPs, all of us have basic features of comparing with different bonds and different ratings, etc. But very simple thing, like I was speaking to an investor from Tamil Nadu yesterday, and he was asking me that I have this bond which I want to purchase at 9.5%, but the yield is 11%. So what does that mean? Like, am I getting 11% return or am I getting a 9.5% return? And is this 9.5 return is giving me a monthly coupon? So am I getting 9.5 monthly or is it divided through the year? So these are very basic doubts which are there, right? And AI simplified all our lives in such immense manners. And I think that's the first thing that AI should do, people should use it for, is really simplifying and personalizing it for them, where they can go deep into a bond to understand the issuer, the credit rating, the liquidity, market risk, etc., compare it over different bonds that are there in the market and choose the right one for them.
Infrastructure providers in Tencent. So good example, ECT exchanges where like coming from the local bonds a little bit, where there is a very finely done infrastructure for secondary bond market trading in USD bonds. But no one trades in the exchanges platforms, and there is no reporting structure. Not because infrastructure is lacking, but because it's easier for foreign investors, for market players to trade through Bloomberg, through market calls, through phone calls and stuff. So what's needed here is to combine infrastructure creation with proper incentive. Be it like tax incentive, be it some other kinds of incentive to onboard the players on this advanced infrastructure. Secondly, what's the real issue now, as Anand has pointed out really well, is underpinning price discovery with better data. And here, a very practical situation we are facing as a data provider. So we have bid-ask data for capital market segments, which essentially helps price discovery process a great deal. But this data is not persisted in the right way, in a full way. There is no closing bid, closing ask readily available, no best bid, best ask available in the data feeds. So it's the issue where, technology is not a problem. We just need to get it done. And it alone will help the price discovery process as well. So also one more issue here can be talking about foreign investors. An interoperability layer can be created to have a sort of unified interface access to RFQ platforms, to CBRICS reporting mechanisms. Because the intermediary chain which is there is sort of impeding smaller APIs from making steady inroads in the market.